Welcome to Cashflow Theory. Today we're going to talk about a really important topic that will relate to you if you're an employee or if you're a business person. All around the world, people pay a lot of tax as employees, and the businesses also have to pay tax. But there's a difference. As an employee, you're actually paying more taxes than most of the businesses. Did you know that Warren Buffett's secretary used to pay higher tax percentage than Warren Buffett? So this is a really interesting topic, and we're going to go more into that with Charit, and let's go to the whiteboard.
So we're going to talk about how the tax system works for an employee as well as for the business, right? So I'm going to identify some of the key differences between the individual who pay taxes in this system as well as the business, how it works in this particular current model. So this may vary from person to person depending on the things that they do. They have the investment properties, businesses, and other things that there are limits that you can claim. But this example, I'm taking famous John, and who's working for 9 to 5. He's not doing anything, so he's just go to work, come back, and then there are a few things that he can claim from his taxes. So I'm going to explain the scenario. So John gets his salary. Let's say, for example, 150,000. Right? For example, right? And then John pay taxes. So, for example, you're making 150,000. So roughly you will pay about 45,000 in taxes. What? And plus other things, yeah. So close to 50,000, right? So let's say 45,000, right? And then whatever left, is your living expenses. So this is, we are talking only about pay tax, and but out of this also you have to pay some taxes like property taxes, GST, and other things, right? So realistically, John is left with less than 100,000, but for this example, I'll take 100,000, right? Right. This is John. This is his cash flow, how it works. So made 150,000, you pay about 45,000 in pay tax, like Medicare and all that in Australia if you're in. And then he's left with 105, and then out of that you pay GST and other things, property taxes and all these other things. So let's say hypothetically he's keeping about 100,000, right? Alright. So I'm going to take the same example to the company, how it applies. Right. So the company made money. So let's say 150,000. So company has to pay GST and all these other things. So that will come later because the GST is a recoverable tax, right? So I'm not going to worry about those things. So, and then after they're making income, they do the expenses, right? For example, let's say we'll take the same example. He spent about 100,000 a year for various things, right? So there are certain things that you can claim from the taxes as a business expenses if you're doing at home or something like that. So it's depending on business to business and then how you do it. So I'm not the best person to talk about those things, what you can claim or what you can't claim. So you need to consult for individual basis for accountant and the tax advisor who can give you advice. And then from that expenses, you derive profit. Right, okay. For these instances, you can not only write off actual expenses, things that you can't see, right? For example, if in the business has a car and the director uses car and then for transport or the business purposes, and then you can claim most of the depreciation on that car. And then if you're using the company furnitures and the other things, that you can claim that depreciation as well. So there are so many phantom losses that you can claim as a depreciation, although it doesn't cost you money, which is hidden here inside that, because as an employee there are very limited chances that you can claim for furniture and the other things that you can use, right, office purposes, and also the cars and things like that. So it's all personal, so there's a very limited things that you can claim as an employee, but as a company, even though it's not there, so you can claim most of the expenses. So let's say, for example, you spend about 100,000 and you left with 50,000 in profit, right? So in the profit, you only have to pay 30% in taxes as a profit taxes. So in that case, it's somewhere around 17,000. So you see the pattern? So as an employee, you pay about close to 50,000 in taxes, but as a business, if it's same income, that you only pay 17,000. So who keep the more money? It's a business or an individual. So that's why it's doing a business. It's different than it's keeping on the salary.